Canadian market up until, I mean, we're close to the end of June right now.
Yep.
It's up 8%.
Yeah.
8% with all the volatility. I mean, when's the right time to get into the market? Yeah, yesterday.
Welcome to another episode where we help you be better in your finances and
Wow.
everything else that you want in terms of financial independence in Canada. It's not an easy task. And of course, it's not easy to dissect the information that is given. You know, you might hear a friend say, go buy this stock, or go invest in a TFSA, or you open your RRSP and you're just wondering, what are they talking about? Well, we've got some of the answers today, and our team here over the years have gotten the experience to help you ensure that your portfolio is as diversified as possible so that you can ensure that you are riding the wave of uncertainty in the world that we live in today.
Oh, goodness. Yeah.
So we see the markets going up, we see the markets going down, and that's a continuous trend for the last couple of years, or I would say post-COVID. It's been that way. Now, we saw what was happening in the Middle East. Thankfully, it's all calm at the moment where we are recording this episode. Markets were reacting day by day with the news. But how was your portfolio reacting? Right? And the importance of long-term planning.
Oh, yeah.
All right?
Yeah.
So we've got someone, they're looking, they've heard that the goal of financial independence is ensuring that they have investments in diversified areas. What are we talking about?
Yeah, I mean, to be all in one particular segment means that you're volatile to a great amount of risk. I mean, with all the news that's going, right? I mean, we saw at the beginning of the year, Donald Trump says something, the market goes up. He says something else the next day, it goes back down. So we're basically on a roller coaster. So your portfolio is on a roller coaster, especially if it was U.S. stock. But the thing that I've noticed is the Canadian markets, right? Like, with our elbows up, right? The Canadian market up until, I mean, we're close to the end of June right now. It's up 8%.
Yeah.
8% with all the volatility. I mean, when's the right time to get into the market? Yeah, yesterday. Right. So there's no way anybody, myself included, could time the market. But if you're there for the long term, if you were there through thick and thin, through the ups and down of what was happening, you would be up 8% year to date. The Dow is up about 4%. Sorry, the S&P is up about 4%, and the Dow's only up about 1%. So if you're all into the U.S., then you wouldn't see the rise. So maybe have a mix. I mean, we were talking last year. I still remember this. The Magnificent Seven, right? They were up 67% for the whole year in seven stocks. But then the election of Donald Trump, and then they went down like gangbusters. And then you're showing me your NVIDIA portfolio, which I'm a bit jealous of. Kind of
missed out.
I missed out, but I kind of picked up on gold. So again, you could never be all in and always have kind of the right investments that are going up at all times. But if you diversify, if we create the right portfolio for your risk tolerance, right? Or else you're going to lose a lot of hair if you don't have the right the right investment for your risk tolerance. Then it could be topsy-turvy. So being well positioned to take advantage of the ups and downs of the market is probably a good thing.
And one of the things in the new generation is they want to go self-directed. But I give you an example where self-directed might not have worked. So this is the example of when TD, the market at that time was going down. TD was also going down because they were facing regulation problems and anti-money laundering situations. But we decided that we're going to take on the risk of owning TD stock.
Yeah, we
because
did.
why? the bank in Canada is too big to fail.
That is correct.
They give good dividends,
Mhm.
and therefore, and we knew that they were going to go back up, right?
We didn't know when.
We didn't know when.
We didn't know when. So we didn't time it in thinking that, you know what, we're going to buy today
Yeah.
and sell tomorrow and make, 10,000%.
Correct.
No. We knew it was a long-term play.
That's right. So now, when we bought it at 77, TD is almost going towards $100.
It's 98.
There
Yeah.
you go.
Mhm.
So that is where, without the help of the people who watch and study the market every day, like the people at TFT, then I would have missed out on that opportunity. Now, the guy to my right missed out on the opportunity for NVIDIA because that doesn't suit his portfolio.
No, too risky for me.
But because I'm young, active, and vibrant, I can take on more risk, and therefore I took the chance with NVIDIA. Right?
Okay.
But this is
the active part, I agree. The young and vibrant, I don't know. Okay.
The point here is that the team, we look at you as the individual, you as your investment, what will be suitable for your needs, whether short or long-term needs. That's where we help you.
No, exactly. I mean, I missed out on tech, but tech is not a big part of my portfolio. But I'm not. I'm heavily invested into precious metals, gold, for right now.
Because you're in your golden years?
I mean, nicely put. I don't know where you get that. But yeah, because gold tends to be a hedge against inflation, and gold tends to rise when the world's going to hell in a handbasket. And what's happening right now?
A lot is happening.
A lot is happening. So we kind of saw a pullback in precious metals, gold recently, but it had a good ride. So so there's still the possibility. And again, for me, you hit the nail on the head. May not be for everyone. My risk tolerance is low, but I love my dividend. I'm not going to invest in something that will not provide a dividend. If I'm going to take a gamble, it's not going to be in my TFSA. It's going to be in my non-registered investment, so that should I lose that gamble because it's purely speculative, at least I have the ability to basically deduct the loss from my bad investment against the gain in my good investment in my non-registered. Unfortunately, you cannot do that in a TFSA or RRSP. In later episodes, or if you want to get in contact with us to see when is it suitable to have a non-registered investment as opposed to TFSA or RRSP, by all means, please speak to us, and then we could customize numerous portfolios for you.
That's right. And in terms of customization, we talk about two ends of the spectrum right here. Someone who's a dividend investor and someone who's looking for growth, you can have a blend of both.
That's right.
You might be an investor where you're somewhere in the middle and you want a balanced approach to investing, but we can assess that based on what we ask. And of course, you tell us.
Know your client.
Know your client. So once that is done, we can have the best of both worlds, and there are funds that are available to you through our team that can help you put it together and have that portfolio. As you make contributions over time, you can look at, we'll do the calculations for you, we'll show you how it works and how the growth will eventually happen. There's no guarantee in investing though, but we can get started now.
Yeah, if history is a guide, then if you are investing for 10 years or more, the markets over a 10-year period, and even a lot of times over a 5-year period, like 90% of the time over a 5-year period, they tend to be upwards. How much upward? Can't really tell you, but at least you will most likely make more money than you would in a GIC or savings type of investment.
All right. That sounds about right on the nail.
Oh, okay.
Right?
Holy cow.
There you go. You're hammering down the point there where we need to be. And of course, this is where you can get into that game. All right. Don't go into the rat race of work. We saw the news headline that suggested Canadians are working not paycheck to paycheck anymore, but bill to bill. So they're looking to pay bill to bill. But, having some sort of plan
Emergency fund.
Emergency fund, a
Mhm.
plan of your investments for the future.
Mhm.
Maybe you can, with a little that you have now,
Mhm.
you can work out a plan.
Exactly. Exactly.
$25, $20,
Oh, goodness.
$10, a
Exactly.
contribution over time, averages out,
Mhm.
you're going to still see growth.
Exactly.
All right. But again, you've got to start with a plan.
Mhm.
And who to start with?
TF
The
team.
TF team.
Good
They've
call.
got a plan.
Good call.
All right. They've got the plan for you. So take the opportunity to speak with us, and we will help you devise that plan today. All right. So don't miss out. Start now. 2025 is the year of your financial breakthrough.
Sounds good.
All right. They told me I should have been a pastor, You think I would have made it?
No.
He talks about ethics, and I can't talk about theology. What is going on? But thank you for watching, of course. Like, subscribe, share, and we've got a brand new episode in a new week. Take care. Bye-bye for now.